Let's get more now on trade. Chris Conway from the Australian Stock Report joining us live out of Melbourne. Chris, good afternoon to you. Great to have your company on the program. 1% weaker for the broader market today, as I mentioned, below that 5,500 mark. What are you reading as sort of the driver of this?
As you said in the introduction, Ingrid, I think it's got to do predominantly with the banks and Westpac's announcement today regarding the quality of its capital. That is really having a drag on the sector, as we all know, given the weighting of the banks, that when they underperform, generally the market heads lower. And of course, throw into the mix Telstra as well. I don't think their results were particularly impressive. So we've got a bit of a firestorm. The market's headed lower. But what I'm really looking for throughout this earnings season is if the market is going to test the 5,400 level, that we really hold there. I think it's important that we do, otherwise we slip back into that range that dominated market action basically for the last 12 months. And if we slip back down there, it might be hard work to try and push back up above that 5,400 level. So just from a purely technical standpoint, I'm certainly hoping that the market does hold 5,400 throughout the earnings season. And if it can do that, maybe it provides, a base from which the bulls can launch their next attack.
Because you weren't seeing the market as too bullish sort of a month ago. What's changed in your view to see this bullish structure for the XJO?
Well, I think obviously US markets breaking and continually printing fresh all-time highs, and the ongoing capital easing of central banks around the world. I mean, money is so cheap out there at the moment, it needs to be parked somewhere. We know what's going on in the bond market, but it will also flow into the equity market. So I think that's been the catalyst that has pushed the ASX above 5,400 in the first instance. And provided we don't get terrible results for the remainder of the reporting season, I think we can press higher.
All right, well, let's talk the big one of the day, Telstra, of course, out with its numbers. The stock down about 1%. It's a tough sort of stock to look at because investors want to see growth, but at the same time, it is sort of a proxy as a yield play at the moment with interest rates where they're tracking. Do you think the capital expenditure they've planned and what they've announced today is enough to keep the stock buoyed, at least for the medium term?
Yeah, look, I think it will, but look, just as I was walking to the studio, James was interviewing the Telstra CFO and he asked a very pointed question about how much of the $3 billion has got to do with the network outages and how much is going to be pushed towards growth. And I haven't seen ducking and weaving like that since Danny Green fought Anthony Mundine. Like he just didn't seem to want to answer the question. Maybe they don't have a really good handle exactly on how the $3 billion is going to be spent just yet, but yeah, look, I think it's probably more a defensive move. We all know about the competition in the space. We all know about the technological advancements that are going on in the telco sector, both here and globally. So I think that $3 billion is probably more defensive. And look, the one good thing about Telstra is they do have a massive war chest and they've got a lot of free cash flow. So they are in the position where they can take on acquisitions for growth. But, I think Telstra's at a fork in the road now. I don't think we'll get a lot more growth out of Australia. I think everyone knows that. So it's about the acquisitions that they make, probably in Asia, and what growth those acquisitions can deliver. Because, of course, the other thing is, the cash payments from the government will end in 2020, so that's going to leave a bit of a hole regarding the NBN.
Because it's the issue, right? It's a tough one with acquisitions because they have to make the right acquisitions at the right prices in the right areas, and it's obviously that's always a risk strategy. So, I mean, when you go looking to invest in Telstra, is this one you're still buying, or is it just on yield that it's attractive?
I think it's just on yield that it's attractive at the moment. And look, I wouldn't personally be a buyer of it now. I come from probably more a trading perspective than a long-term fundamental perspective. But yeah, I don't see a lot of upside catalysts. And as you rightly say, it will very, very much depend on the acquisitions, the quality of them, how quickly they can integrate them, and the price that they will pay for those acquisitions. Because whilst they'll invest in Australia and they'll stay out in front probably in terms of the leading network and telco in Australia, their growth will really be driven by the acquisitions and what they do offshore.
Apologies, Olympics going on in the background tends to be rather loud. Let's continue on with our discussion though. When it comes to Magellan Financial, it's another one we're watching today with its result. Look, it overall looked pretty solid. What did you take out of it though?
Yeah, look, I really like the results. I'm particularly impressed by their inflows, which are a bit of an outlier in terms of the global perspective. They continue to attract solid flow, and not really surprising considering their global fund has returned an average of 19% over the last 5 years. So they're doing things particularly well. I think the other slightly surprising element of the results was that their cost line came in below market expectations. So a really strong result. The fundamental guys in my office have liked this stock for a very long time. I don't see any reason why they wouldn't continue to like it based on the results.
What about this sector in general, though?
Well, obviously a challenging space. I think Magellan's the one out of the box, again, in terms of performance returns. And as I say, that outlier in terms of the fact that their inflows are particularly strong when you look across the globe. They're probably one of the leaders in terms of inflows. So, yeah, I think they're doing things particularly better than others. And look, we all know that in an environment where interest rates are so low, getting a yield and getting a return is becoming increasingly difficult. So for fund managers in general, a pretty tough operating environment.
Yeah, okay. Well, that's one we'll continue to keep an eye on. Just want to mention JB HiFi as well. That stock's up about 1.4%. There's been a lot of discussion. I know you've been following this story with the good guys and whether or not they'll take this one on. Obviously, good news from the ACCC today for them, but the good guys has already gone on its international roadshow, put a lot of money into that. Will this impact, I guess, the potential for that tie-up?
Oh, sorry, the roadshow or the announcement today?
Both. Because if they're already on a roadshow, I just wonder if the announcement today is overly positive. I mean, obviously it would be very positive if they hadn't already embarked on their IPO roadshow.
Yeah, look, I think the roadshow was just a matter of course. I think it was something the good guys were always going to do to turn over all the rocks and uncover the interest, globally. So I think the roadshow was something that was always going to happen. The announcement today, I think, is definitely a positive, absolutely, for JB HiFi and potentially the good guys. The caveat, of course, is whether or not they can get it at an appropriate price. I thought the ACCC announcement was somewhat of a surprise. You know, that they said that they have different customers in different segments, although the two entities combined would count for 50% of, say, the television market here in Australia. So it was interesting from the ACCC and the commentary they provided around it, but I think a positive result. I mean, clearly it opens the door for JBH to lob a bid. And hopefully it's a successful one from a JBH standpoint.
So this would be very positive for JB HiFi. What about for the rest of the retail space? How negative is it for the rest of them? Harvey Norman for one.
Look, I think not having a cashed up competitor, as would be the case if the good guys IPO'd and they were looking to expand and whatnot and grow their footprint and increase the number of stores. I think having one less competitor rationalises that sector. I think two competitors is better than three, obviously. So maybe it would have a net positive on Harvey Norman, but of course the winner would be JBH again if they can get it at a good price.
All right, well that's one we will keep an eye on. Chris, great to have you coming on the program. We might leave it there.
Thanks, Ingrid. Cheers.
Chris Conway from Australian Stock Report.